Hi, and welcome to an early global view on Monday, June 13th, 2016. It is currently 7:45 a.m. U.S. Central Time, and coming to you just a little bit later than usual because we wanted to give a good look to the G20 OECD GDP growth release this morning. That's for the first quarter of 2016, and we'll be getting back to that shortly, but essentially, it puts a lot of faith on the uptick in growth in Europe, which is since starting to fade, as compared to continued weakness in China, the UK, and the US. So we're not necessarily that impressed by that. But let's get to the quick take on the markets this morning, and that is that the S&P 500, this is now the September contract, is trading down at 2081. That's off 6. Now, June is still the lead contract until the close on Thursday, so you have to add $9 to any of this to get the front month levels. Whereas below 2085 might look bad for the front month, it in fact is still up at 2090. So 2085 and 2075 are the key lower supports for the lead contract. That's like 2075 more or less, which is interesting because that is also the key low from the early sell-off on the back of the stale U.S. non-farm payrolls number going back a week ago Friday, before the market began to recover again, when it became a bad news is good news market again. And of course that would mean 2065 in terms of the September contract as to where the June would have to break. But after Thursday, those levels, 2075 and 2085, become the key levels for September as it takes over lead contract role. The higher resistance, of course, if we look back up here, right up here was about 2105, the old trading high in the June contract from April, so that's about 2096 in the September, and much like September, the June contract gapped back below 2105 on Friday, so that was not a good sign, and we'll be keeping a close eye, of course, on 2096 in this contract. And the higher resistance above that was up into 2120 on the lead contract on front month June. That was the equivalent of about 2011 on the September. So pretty much stalling into that bigger, higher resistance once they got through their April highs is what has occurred on these contracts, and we have to keep an eye on all the levels we just noted. That's pretty much it for the quick take on the S&P 500.